The misstatement of age or gender provision is a staple topic on the national portion of the life insurance exam, and understanding its mechanics is essential for passing. When an applicant provides an incorrect age or gender on their insurance application, the law does not allow the insurance company to void the contract or deny a claim simply because of this error. Instead, the policy remains fully valid and the insurer must adjust the death benefit to reflect the amount of coverage that the actual premium paid would have purchased if the correct age or gender had been known at the time of application. You should expect exam questions that ask whether a policy is voided if the insured lied about being 35 when they were actually 45. The answer is always that the policy is valid, but the benefits will be adjusted. This is a fundamental protection for the consumer because it ensures that the coverage they paid for is still delivered, even if the math behind the pricing was initially based on false data. Let us look at a concrete exam-style example. Imagine a client named Sarah who tells the insurance company she is 30 years old when she is actually 35. Because she is younger on the application, her premium is lower than it should be. When she passes away 10 years later and the insurance company discovers her true age during the claims process, they will not refuse to pay the claim. They will calculate how much insurance her premium would have purchased for a 35-year-old and pay that adjusted, lower amount to the beneficiary. Conversely, if an insured overstates their age and has been paying too much in premium, the company will typically increase the death benefit to reflect what that higher premium should have bought at the younger, correct age. This is the only provision that allows the insurer to change the face amount of a traditional whole life policy after it has been issued, ensuring the insurer is not taking on more risk than they were paid for. One of the biggest traps on the exam is confusing this provision with the Incontestability Clause. Many students mistakenly believe that after 2 years, the insurance company can no longer adjust for a misstatement of age or gender. That is incorrect. The misstatement of age provision is a permanent exception to the Incontestability Clause. It allows for adjustments at any time, even decades after the policy was issued. While a company generally cannot contest a policy for fraud or misrepresentation after 2 years, they are always allowed to correct the math regarding age and gender. Another common trick involves the remedy for the mistake. The exam might offer an answer choice suggesting the company will refund the excess premiums or charge the estate for the missing premiums. While some states allow premium adjustments while the insured is alive, the most common exam answer for a death claim is an adjustment of the death benefit payout. To remember this concept, use the phrase, "age adjusts the amount." If the age or gender is wrong, the amount of money paid out is what changes, not the validity of the contract itself. This ensures that the insurance company receives the correct amount of premium for the risk they are actually assuming based on actuarial science. Insurance companies use mortality tables to calculate the exact amount of risk they are taking on based on age and gender. If an applicant provides an incorrect age, the premium they are paying is essentially purchasing a specific slice of coverage from a different mortality table than the one they actually belong to. The adjustment process simply aligns the payout with the correct table. This is why the provision is described as a math correction rather than a penalty. The insurer is not trying to punish the insured for the misstatement, but rather to ensure that the contract reflects the actual economic value of the premiums paid. Examiners will often test your ability to distinguish between a material misrepresentation that could void a policy and a misstatement of age. A lie about a heart condition might void the policy within the first 2 years, but a lie about age will only ever lead to an adjustment of the benefit. This is because age is considered a factor that can be mathematically corrected, whereas a health condition changes the entire nature of the risk being insured. When you see a question about age or gender on your exam, look for the answer choice that mentions adjusting the benefit to match what the premium would have purchased. Keep in mind that gender is treated exactly the same way as age in this context. Since women generally have longer life expectancies than men, according to mortality tables, they often pay lower premiums for life insurance. If a male insured misstates his gender as female on the application to get a lower rate, the insurer will discover this and reduce the death benefit upon his passing to reflect the higher cost of insuring a male at that same premium level. If you keep the mnemonic "age adjusts the amount" in mind, you will correctly identify that the policy remains in force, while the dollar amount of the benefit is the only variable that moves.